some common accounting terms uh, used in accounts, and we will go through to business center also. Uh, so whenever we create the chart of account and define ledger, sometime some accountant ask some question that a particular account where should it be. So most of the time we can suggest only, but the decision would be the accountant or CA. So there are five parts of chart of account: assets, liabilities, capital, revenue, or expense. Okay, capital, or you can say equity. So assets, liability, and capability. Capital is the part of balance sheet account, and revenue and expense are in income statement. So first we understand what is assets, liabilities. So anything which we have, and it has value more than 1 year, means it's not a consumable things. So it's our assets, like land, building, vehicle, and cash in hand, bank balance, our goodwill, our trademark, our copyright, and machinery, furnitures, stock, and our investment also. All are our assets. We can sell it and convert into cash. So all those things which can be sale and convert into cash is our asset. Even customer is our asset, because uh, we receive money from the customer. Means anybody, if he will give me 10 lakh rupees, means it's my asset, because actually that 10 lakh rupees is mine. Okay, another term is liability. So liabilities are anything which we have to pay is liability. Like we take some loan from bank, so we have to pay it to the bank. So bank loan is my liability, rent payable is my liability, outstanding salary, creditors, means vendor, because we have to pay to vendor. So these all are our liabilities. Means dues. If our bank loan, rent payable, and salary is dues, so it's our liability and we have to pay it. Another thing is income. So what which is our main business, from which we are generating income, we getting money. It all are in income or revenue. So either we sales and to get income from commission or interest, income from consultancy, all other income. So is a part of income. And expense, you all know that expense, either we purchase anything, or our expense of electricity, travel, rent, all are our expenses. So first we have to understand assets, liability, revenue and expense. Revenue means income and expenses. Capital belongs to the owner. All the things belongs to owner. It's capital. So it's not a big part. So we just concentrate to assets, liability, revenue, and expense. Okay. So according to these five parts, accounts entry also defined for ledger, which should be debit or which should be credit. So there are two way to understand the debit and credit. So we go through both of them. First one is assets and expenses. If they increase, so it go for debit, and if they decrease, so it go for credit. And same way, liabilities, equity, and revenue. If they increase, they credited, and if they decrease, it's debited. So whenever we create any entry or do some customization and want to understand base entries, so we can just learn it and check accordingly. Means inventory is our asset. So whenever inventory increase, when inventory is increase, when we purchase, okay, that time inventory would be debit. Okay, and another easy way is three types of accounts and their rules. But please do not go through the three types of accounts is real, personal, nominal. Just remember these three rules. Debit what comes, credit what goes, debit the receiver and credit the giver. So whenever we do some entry, so we can get one account debit or credit and another one uh, will be the opposite entry for that. Okay, we will understand it according to our business center. And expansion loss, a debit, and credit will be income and gain. So most of the many function consultant who are not from account background, these methodology for them only, that just remember these rules and you can go through the entries. So these are the entries whenever we post the purchase invoice. So there are two parts. One is vendor part and another was in inventory. So whenever we purchase anything, so vendor means payable account. That time vendor is a sender. Okay. So means giver. So giver should be credit. So vendor is credit. And what is another account for vendor payable is purchase account. So vendor is credit, then purchase account will be debit. And you can learn from another way also. Purchase account is expense and vendor payable is liability. So whenever liability increase, it credited. Okay. And whenever expense increase, it debited. So you can learn in the both way. Same in inventory. Whenever we purchase inventory, so inventory increase and it's a asset part. So whenever asset increase, it's debit. Okay. And another way which comes is debit. What comes? debit. So inventory comes when we purchase, so it's debited. So you have to learn either this rule or this, or you should learn both. Okay, if you confuse in some scenario, so you can recall this one also, but most of the scenario you can cover from these three rules. As sometime you can confuse that purchase, payable and inventory all correct, but purchase discount comes, goes, or receiver giver, which is that? So you can check the purchase discount is our income. Okay, so means revenue, and whenever revenue increase is credited, so it's credited here. Okay, there is any confusion? Yeah, actually you have to learn all these things, as you are not basically from the finance background, so you can understand from these rules. Any journal entry or all entries for that. Okay, same way sales. So when we go for sale, so customer, that time customer is the receiver, so receiver debit, and another account is sales account. So sales account is credit, or we can go from category wise. Same way, there's two part in sales also. One is sales part, another one is inventory part. So whenever we purchase, there are two accounts, it's inventory account and the direct cost applied account. And for COGS, inventory account and COGS account. And you should remember one thing, that if we purchase item from 100 rupees and sale is to 150 rupees, okay, our inventory will decrease with 100 rupees only. Okay, so COGS same as the direct cost applied account. We will go through the direct cost apply account. Where is it? We go to the, but first we go for the production module. So in production also, whenever we consume, okay, so raw material, you can say consume or you can say goes out. So inventory goes out, it's credited. And another account is WIP, it will debit. Okay, so we found out one account which should be credit. So we can easily make another entry for debit. And when we create the output, so we get some inventory, means what's come. You can say what's come. So it's debited here, inventory, and then WIP amount is credit. And I want to explain two more thing for this to our business center screen. Just hold on. Mm, Yes, my skin is visible to you. So we are discussing two things. First is where system pick COGS. Okay. So this is unit cost, and our inventory decrease with unit cost, and same way COGS. Okay. And one more thing, business center create one more entry while posting the receipt or shipment, and it depend on inventory setup. So in inventory setup, if expected cost posting to GL, this boolean is true, then only system will create GL entry while posting the receipt. Okay. So what happened when we post the receipt? We go to post purchase receipt. What happened? Yeah, it's working. So it's create two GL entry for interim to show the expected cost. Actually, sometime we purchase, post the receipt, and same time we sell the same thing. But invoice, purchase invoice can be pending that time. So it's for that immediate inventory costing and available inventory in our stock, value of inventory basically. So in this scenario, inventory accrual account interim, which is a part of liability, debited, and inventory account interim, which is part of assets, credited. From where it's come? Inventory account interim comes from inventory posting setup, and inventory accrual account interim from journal setup, journal posting setup. Okay. When it inventory creates? Only when expected cost post to GL boolean true in our inventory setup. And system, we will go to value entry and system update cost amount expected. And same for A shipment also system will create same entry. If you have any confusion or any doubt, or you need some more clarification, please comment, or you can connect me with my phone number 9810999428. Okay.